Hi everyone, Hannah here from DDP Property. If you're serious about building a high-performing property portfolio, today's video is for you. We're unpacking 3 powerful topics. Off-market deals, are they really hidden gems? What you can actually buy with a $400,000 investment budget. And finally, the ultimate investor question. Should you renovate or just buy and hold? Let's dive in. Off-market deals are one of the most talked about topics in property circles, and for good reason. So how do we access them as buyer's agents? It all comes down to relationships. At DDP, we've built strong networks of developers and agents and vendors nationwide. These connections allow us to tap into opportunities before they hit the open market, or in many cases, properties that never will. But are off-market deals always cheaper? Not necessarily. The value is often in the negotiation power and lack of competition. You're not caught in a bidding war or emotionally charged auction room. That alone can mean savings of $20,000 to $50,000, plus quicker access and deals in high demand markets. So when should you avoid them? If there's no transparency or proper due diligence, walk away. Just because it's off market does not always make it a great investment. We always run feasibility checks on capital growth, yield, and renovation potential before advising a client to move forward. So yes, off-market deals can be absolute gold when they're sourced correctly and analyzed with strategy. Let's talk about budget. One of the most common questions we get is, can I still invest with $400,000? And the answer is yes, but you need to be strategic. With $400,000, you're not going to be buying in Sydney or Melbourne, but there are still strong opportunities in regional growth corridors. Think these sort of areas: South Australia, regional areas like Mount Gambier or Murray Bridge, regional Queensland, places like Bundaberg or Toowoomba, and Western New South Wales, established towns with solid infrastructure. What are you likely getting? An older home on a generous block of land? That means potential for value-adding strategies like cosmetic renovations or even granny flats in some councils. But be prepared for maintenance risks. Older homes can come with plumbing, roofing, or electrical issues. Sometimes they can have a slower pace of capital growth, but potentially stronger cash flow than metro investments. The key is really to do your due diligence, understanding vacancy rates, population trends, and infrastructure projects. All of these factors that will drive demand over the next 5 to 10 years. A $400,000 property might be your foot in the door to long-term portfolio growth, especially if paired with a strong rental return and future upside. Okay, now let's get into the strategy debate. Should you buy a renovation project or play it safe and go buy and hold? Let's break it down. Renovating allows you to manufacture equity. We've helped investors buy tired properties, do a $30,000 reno, and boost the valuation by $80,000 plus. That equity can then be used to access your next purchase. But it is not for everyone. You need a clear budget, a reliable team, and a willingness to take on risk. Some of the reno hotspots. Think working class suburbs close to gentrifying areas. Parts of Adelaide, Outer Perth, or even Ipswich in Queensland. Buy and hold for investors looking to scale passively. Offers consistent rental income and long-term capital growth. It's ideal if you want a portfolio that doesn't require your constant attention, or if you're juggling a career or family and can't afford renovation delays. How do you choose? Okay, so ask yourself, do I have the time and the experience to renovate efficiently? Is my borrowing power stronger than my cash buffer? And what's my goal? Short-term profit or long-term equity growth? In many cases, we do recommend starting with a solid buy and hold in a growth area, and then using your second or third property as a renovation or value-add project once you've built up equity and experience. So there you have it. Off-market strategies, the truth about $400,000 budgets, and renovation versus buy and hold. If you're building a serious portfolio, the right move is not always the flashiest. It's the one backed by data, strategy, and a team who knows the market. If you want help mapping out your next investment, reach out to us here at DDP Property. We're here to help you grow with confidence. Don't forget to like, subscribe, and drop your questions in the comments below. See you all next time.